Hello everyone, it's Friday, April 10, and today we will review the charts for the euro and the pound to identify potential market trends. As you can see, the euro has managed to withstand downward pressure with buyers pushing it back to a one-month high. The British pound has followed a similar trajectory, although it fell just short of its own one-month peak. Overall, the outlook appears optimistic as market participants are betting on a positive outcome from the ongoing Middle East negotiations involving the US and Iran, as well as the Israel and Lebanon. This sentiment is boosting demand for risk assets despite a recent downward correction. In related news, US President Donald Trump expressed optimism about the US-Iran deal, but later issued a warning to Tehran regarding proposed fees for transit through the Strait of Hormuz. Notably, Iran plans to charge a cryptocurrency equivalent of $1 per barrel of oil transported through the strait, a requirement that Trump opposes. Such a precedent could have significant implications as other countries engaged in commodity transit might follow suit, potentially disrupting energy infrastructure and affecting global commodity prices. Trump also pointed out that Iran is not providing access through this strait, which is not what he anticipated. At present, the Strait of Hormuz remains largely closed, with vessel owners awaiting clarification of the situation. While US and Iranian military actions have nearly ceased, uncertainty will persist until official negotiations take place. Let me remind you that US and Iranian representatives are scheduled to meet in Islamabad, Pakistan on April 11, while representatives of Israel and Lebanon will hold a meeting on April 14. One of Iran's key demands is cessation of Israel's strikes against Hezbollah and Lebanon. The outcomes of these talks are crucial for market participants as they could lead to positive shifts in the market, allowing the euro and the British pound to strengthen. Looking at Thursday's data, US GDP was revised downward to a sluggish 0.5%, down from an initial estimate of 0.7%. Additionally, initial jobless claims in the US climbed, which waned on the dollar. The core PCE price index for February met market expectations and did not prompt any significant market reaction. Now, let's take a look at today's macroeconomic calendar. It includes consumer price figures from Germany, which have been released. In March, the inflation rate in Europe's largest economy matched initial estimates, registering a month-on-month increase of 1.1% and a year-on-year rise of 2.7%. This data had a little impact on market sentiment. Traders will also keep an eye on Italy's industrial production and comments from European Central Bank officials throughout the day. Later, attention will turn to US inflation data. The consumer price index for March is expected to show an increase of 0.9%, up from 0.3% in February. The annual CPI is projected to climb to 3.3%, up from 2.5%. Core inflation is forecast to rise by 0.3% month-on-month and 2.7% year-on-year. Since the core CPI excludes energy and food prices, this increase is relatively modest. What is more, the University of Michigan's surveys on consumer sentiment and inflation expectations will be on focus for traders. If inflation aligns with market expectations, it is unlikely to have a significant impact on the dollar's performance. After all, many are aware that inflation remains elevated due to the ongoing Middle East conflict. Although there are signs of potential de-escalation and traders are anticipating a positive outcome. However, if inflation surpasses expectations, the US dollar could gain value. Turning to technical analysis, the 1-hour EUR USD chart indicates that a decline followed by a false breakout at 1.1681 or 1645 could present a buying opportunity for the pair. In case of strong US inflation data, traders might also consider long entries on a rebound at 1619, anticipating a move of 25-30 pips. For those looking to open short positions, opportunities could arise at 1719 on a false breakout, or if the price breaks and holds below 1681. In this scenario, the euro may dip to 1645, potentially reaching 1.1619. Additionally, going short during upward movements could be considered at 1.1745 on a false breakout, or at 1769 on a rebound, with an intraday correction target of 20-25 pips, especially if positive news emerge from the Middle East. Now, regarding the British pound, the outlook is similar. Bullish activity is likely to emerge around levels of 34.03 and 33.77 on a false breakout. Long positions on a rebound would be prudent at 33.43, targeting a move of 30-35 pips. Short entries could be considered at 34.29 or 34.53 on a false breakout. Notably, with no significant reports on today's economic calendar from the UK, pressure may persist, keeping the pair range-bound. Short positions on a rebound would be relevant at 1.3481, aiming for an intraday correction of 25-30 pips. Wishing everyone good luck and have a great weekend.